Welcome back. Big chunks of the stock market have lagged behind the technology sector's big gains. The Nasdaq's up 27% this year. You're looking for much of the market to catch up. Why?
I think there's scope for a catch-up trade, and of course, if you exclude some of the big tech names, the S&P is barely up for the year. But since the beginning of June, we have seen the cyclicals trade catch up, and just the S&P X technology start to catch up. The reason is if the economy is not falling apart, that I think more and more sectors might actually be investable. First of all, we look to China. Inflation in China is zero, potentially negative. So I do expect the central bank in China to do more. I expect the policymakers broadly to do more. And if that's the case, that might be positive for materials, that might be positive for energy, that might be positive for industrials. So you can have a big chunk of the cyclical S&P exposure react to that. The other thing, we look at the broader manufacturing numbers, and if you look at new orders, for example, they have been starting to tick up. If you look at the services side of the equation, that's also holding well above 50, so that suggests strength in the economy. So that's what I suspect might happen in the second half of the year if more and more investors become convinced that we're not on the cusp of an imminent recession, that there is a reason to add back to cyclical exposure. By the way, cyclicals are cheap relative to where tech is trading. And in fact, if you take tech out of the S&P 500 valuation, and if you look at those multiples, they're right in line with their 10 or 15-year averages. So they're cheap, they're unloved, and I think they have a catalyst to the upside.
And what should consumers, as with their investor hats on, be looking for in that context?
Well, I think there's likely a need to right-size somewhat the tech exposure if you've had it. I mean, don't get me wrong, I love technology, I love growth investing, I love artificial intelligence, but some of the things within that probably have run too much too fast, and I wouldn't be surprised to see a little bit of a pullback in those spaces. So I think locking in some of the gains, rotating that into some of the cyclical sectors like we talked about, or maybe even looking at the equal weight S&P 500 exposure to make sure that you're not just overweight in tech.
At the same time, many of these same consumers are talking about Amazon Prime Days this week. We're coming out of that. Is that a meaningful market event? Is it a meaningful event for Amazon, an important barometer of the stock market?
Well, I think yes and yes. I think it's definitely meaningful for Amazon, and I think it's definitely meaningful to tell us what the strength of the consumer is like out there. And I suspect it's going to continue to remain strong, the consumer that is, because if you have a job, if you're getting paid more for doing that job because we know wages are rising, if you have a balance sheet that's much, much healthier than it was during the financial crisis, you have the spending power. And especially, as the recession fears sort of get pushed back, consumer confidence recovers. So you have the means, and I think you might increasingly have the willingness to spend. So that should bode well for the Prime Day.
Are we in an AI boom, or is it something we'll not be talking about in a year?
Oh, I think we'll be talking about it for years to come. I think artificial intelligence is the biggest commercial and disruptive opportunity that we have today. And it's a mega trend that we've been talking about for a number of years, but it's here to shape every single industry, or reshape, I should say. It's here to disrupt, I would say, every single industry and, add productivity to every single job. So I don't think it's a boom and bust cycle. I think it's one that you have to think carefully about how you want to invest in, but you have to invest in it.
So this is not last year's cannabis boom or anything like it. This is to continue.
Look, I mean, if you look at some of the estimates out there, artificial intelligence can add up to $17 trillion to global GDP over the coming decade. And when you think about where that's coming from, is, as I mentioned, the productivity boost. It might have been a 40-hour research task could literally take a matter of minutes, if not seconds. And if you start to apply that to cybersecurity and healthcare and financial services, that's a tremendous amount of productivity gains. And then speaking of Amazon and speaking of AWS, for example, or just how artificial intelligence get used in some of the search engines, there's so much potential to develop new products that are AI powered, AI driven, that didn't exist before. So that's where the value creation also comes from.
Much to watch in the coming years. Thank you, Anastasia.
Indeed.
For more of today's business headlines, as well as timely analysis, stay with QZ.com.